Good morning, Steve Freed in Chicago with the morning grain comments. Well, prices are higher overnight, trying to rebound from this week's weekly low closes after the USDA report. We've got export sales today, wheat somewhere between 250 to 500,000 tons, corn 700 to 1,600, beans 600 to 1,400. Again, I think all these markets need new export demand to push through some key resistance. For the soybean market, nearby November soybean futures is closing lower for the week for the ninth straight week. For corn, this will be the first week of a lower weekly close in 5 weeks. And for wheat, it is the first weekly lower close also in 5 weeks. I think each market has its own individual fundamentals. Soybean market is looking for demand. With these higher USDA supply numbers, both US and globally, we need more demand. It's interesting to note that China's September PPI data was up 10%. That's the fastest growth in 25 years. We also note that China's coal domestic prices are record high. Because of the electric shortages, it seems like China's giving priority to residential rather than industrial. So 20% of the soybean crushers have downtime because of the shortage, but still that is overcapacity versus soybeans that they crush. We also note that there is talk that down the road, U.S. soybean crush is going to go higher. Margins are extremely high, and the perception is that crush capacity will increase for green fuel and soybean oil. So what do we do with the extra soybean meal? We also note that Brazil corn crop plantings are increasing and conditions are favorable because of the recent rains. You can say the same thing about soybeans. Argentina, 23% of their corn is planted versus 29 average, and they did see a 3% increase in the good to excellent category to 27. From a weather standpoint, U.S. Midwest is drying out. Brazil's still going to see rains. Argentina's turning drier, and Russia is dry. France corn harvest is 15% done versus 62 average. Yields are getting better. Ukraine harvest is 22% done, and also their corn yields are getting better. It looks like the Ukraine crop will be 39 million tons versus the USDA dropping 1 million tons in October to 38. U.S. hard red winter wheat 22 prices are competitive to Europe and the Black Sea. And it's interesting to note that at current pace, Europe's wheat exports would be 47 million tons. That would suggest they're ending stocks at minus 2 million tons. So the market's looking for them to see a decline in exports both in Europe and Russia. 55% of the corn should be harvested versus 65% of the U.S. soybean crop. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.